Okay, everybody, it's me, Gregory Mannarino. I'm sorry, I'm like kind of like laughing or whatever it is. It's another situation that you can't believe, but it's in our face yet again. What am I talking about? Well, we got another ADP jobs report this morning. We lost 2.76 million. This is following an historic drop last month. And wouldn't you know it, stock futures are higher across the board. Stocks are poised for yet another rally. You can't make it up. You can't make it up if you tried to do it. But that's the situation. So it's just so twisted. It's so twisted. And that's why I started off with, it's just disbelief. It's disbelief in many ways. All right, so let's talk about a few other things here. Gold and silver remain under pressure a little bit. Cryptocurrencies getting a bit higher. Crude oil is fractionally lower on some kind of compromise from OPEC. Whatever. Okay, they're propping up crude oil. You know it. I know it. The mechanism in place here is simple. Prop up crude oil. That's all. They can jawbone it. They can say what they want. Crude oil is massively overvalued. And why? Because they need it high to prop up the stock market. It's all a game. It's a game. Stock futures, like I said, are higher. Why? Well, you know who's buying it all. It's the hedge funds. I explained this to you just, a few days ago. I said hedge funds are getting in here. They're buying the market. Stocks are going up. And that's exactly what's going on here. And these hedge funds are getting cash directly from who? Yeah, the Federal Reserve. These hedge funds, the Wall Street hedge funds, have a main line right to the Federal Reserve, along with the Wall Street banks and the Federal Reserve themselves, who has a trading desk, at the New York Fed. You don't believe me? Look it up for yourself. Google it. Does the Federal Reserve have a trading desk? Yeah, you'll find out that they do. Anyway, a 10-year yield is higher, 0.716. You know I've been beating this to death. But in this kind of environment, when you got that 10-year yield moving up, what does it mean? Cash is leaving the debt market. It's going into the stock market. So easy. This is risk on, which means metals are going to fall under pressure. Cryptocurrencies could fall under a little bit of pressure here, although they're catching a bid right now. Look, my job here for all of us is to keep you ahead of this market so you know exactly what to do, when to do it. That's what this is all about. I've promised all of you since, I don't know how long, forever now. It seems like forever. I've been out here quite a while. That I will never let you down. That I will always give you cutting edge, actionable information on this blog. You will not lose. Won't let it happen, like I've been saying forever. Anyway, so let's set the scene. Another abysmal round of economic news, and stocks are off to the races yet again. Nothing short of divine intervention will stop this market from moving higher. That's what they're doing here. It's distraction. Look at the stock market. Forget about millions upon tens of millions of people losing their jobs. Forget about how there's no profits being made by these corporate profits actually could be worse. That's the truth. But all these numbers are fake anyway. And the economy is dead. We got a long, long recovery, regardless of like Larry Kudlow, who keeps talking about booming recovery coming. Get ready, everybody. Oh, okay. All right, Larry, well, maybe you can explain to us how that's going to happen when there's been a grand culling, deliberate culling of small businesses. It's incredible. It's absolutely freaking incredible. All right, with that said, people, this guy loves you a lot. We know what the scene is. We got it covered. And we know what to do to take advantage of it. In these risk-on environments, you got suppressed metals. What are you going to do? You're going to buy them. With regard to Bitcoin and cryptocurrencies, we're going to wait here. They are going higher, but with regard to Bitcoin, I want to see it go above 10 again. Okay, we went 2 times so far. We broke above 10. I want it to break above 10, like 10.5 or so, pull back to 10, stay there a little bit, and that's our buy point. Okay? And I will keep all of you on top of this, either on this blog or via my free newsletter in the description of this video. Please, if you have not yet, consider subscribing to my newsletter. There's a lot of good stuff there. Love you a lot. See you at the end of the day.